In chapter 13, some of the concepts aren't that hard, I hope, for you, but some of the wording tends to get confusing. So, in this chapter, I think that sticking point is these warranties and how to do the journal entries for those. So, I want to walk you through a homework problem with that and then show you how that relates to what a test question would look like. Because I do think that is also another area where students get confused is I'm doing all this homework, but it's not translating to those test questions. So let me walk you through this one topic. If there's other topics that you need help with, please let me know. I'd be happy to put something together for you. So we want to look at warranties and coupons. So warranties are just as you would expect. You know, if you buy a TV, you can get that warranty. Coupons, same thing. You know, you get those coupons in the mail, or maybe they're sent to you when you buy something. We don't often think about the accounting for these types of things, but those are considered loss contingencies and create a need for a liability. So I just want to review what a liability is. You know, a liability says you have a present obligation to pay in the future. It's an unavoidable obligation and it already has occurred. So we already know that this is going to happen. What caused that liability has already happened. So now let's review what a loss contingency is and when we record that. Warranties and coupons fall under these loss contingencies because we are saying to our customers, you know, we'll pay you back, hence that liability. A loss contingency, if it is probable, meaning it's most likely going to happen, and it can be estimated, this liability is recorded. Now, if it's only one of those two options, then if it's, you know, maybe that loss contingency is probable, most likely going to happen, but we don't really quite know what that figure is, or the other way around, we not sure it's going to happen, then we just footnote that disclosure, but we don't do any journal entries to record that transaction. So let's go through one of your homework problems. I picked this one because when we talk about these coupons and the wording in here, it does get a little bit confusing. So when you're doing some of these problems, make sure you use that list of accounts at the bottom of your Wiley Plus. It is going to help just kind of pull out what type of account name that they want. I think that's where a lot of us get stuck as well. So in this problem, we talk about coupons, and they sell this soap powder, and it comes with one coupon, and you need 10 coupons to redeem what they call a premium. Now, I think this is where it gets confusing because a premium is actually a kitchen utensil. So if they would have said redeemable for a fork, it might have been a little bit more in our minds, made a little bit more sense because when we don't think a premium is a kitchen utensil. Anyway, going forward, so they say in 2020 they purchased 8,800 premiums at 80 cents each, and they sold 110,000 boxes of soap. They also had 44,000 coupons were presented for redemption, and also that 60% of the coupons will be eventually turned in. So we need to record all of this because, again, create that liability. It's a loss contingency that is probable and reasonably estimated. So let's go through these journal entries. The first thing we have to do is record that we bought these premiums. So these premiums, again, kitchen utensils, that's an asset. We're going to debit this inventory of premiums. And that's what I got I would have never come up with that name had I not looked at that list of accounts. And we're going to credit our cash account. You got to figure out how much that was. We purchased 8,800. They were all 80 cents each, which comes to 7,040. So we'll debit and credit those amounts. The next step then is to record our sales. We got some cash. We're going to credit our sales revenue here. Again, in these homework problems, sometimes just finding that right account or account name is a little bit difficult. Don't get hung up on it. Send me a quick email. We need to figure out the amount for that. Again, we sold 110,000. Those were all $3.30. So we'll record that amount. The next step of this is that we actually had some coupons that were presented for redemption this year. We want to make sure that the expense for these go in the same year as the revenue. We want to match those revenues and expenses. So if these coupons were turned in during the same year as that revenue was generated, we want to make sure there's an expense on the books. So we're going to record the expense for that. Again, the name, premium expense is what they're calling that. And we are going to credit the inventory of premiums. We're reducing the amount we have available. They said 44,000 coupons were turned in, but remember, it takes 10 coupons to turn in to get this kitchen utensil, and we're going to record the amount that it cost us. So that would come to $3,520. And finally, that last step is to record how much we expect the estimated amount of coupons that will be eventually turned in. That creates a liability because there's an obligation to pay. It's probable, it can be reasonably estimated. Therefore, we want to make sure we match the expense in the same year as the revenue. So again, we're debiting that premium expense so we can get that on the books in the same year. We're going to credit our premium liability. So therefore, if any of these get turned in later that were not for this year, we would reduce that liability. Now we got to figure out the amount that we need to record for this liability. We sold 110,000 boxes. We expect 60% of those to be returned for this kitchen utensil, but 44,000 were already returned this year. So that represents how many coupons we have left. Take all that, divide by 10, because again it takes 10 coupons to get this premium. And then we're going to take all of this and times that by that 0.8 to get the cost of this, which is $17.60. So that walks you through those journal entries. Now let's look at, well, how do we turn this into a multiple choice question? What kind of question might be asked? let's look at that. So let's look at how these homework problems translate into multiple choice. Give you a little insight onto how these tests are comprised and hopefully help a little bit with that transition. So one of the things you need to be really careful with on these multiple choice test questions is to make sure you read carefully what they're asking for and then pull out the information that you need. So in this first problem, they talk about the warranty and they estimate, give you a bunch of information. What I try to do is go down to the bottom of that question first. What do they want? They want to know what amount of liability would the company report on its balance sheet at the end of the current year. So now that I know what they're looking for, I'm going to go back into that question and pull out that information that I know I need. So just reviewing, the warranty cost is $150 per unit. I'm probably going to need that. They already have a liability on the books that shows $5.2 million. They sold 30,000 units and they paid claims of $6 million from prior year sales. So now that I have all that information, I need to find out, well, what is the liability on the balance sheet at the end of the current year? First, let's walk through what those journal entries look like. Because this is a test and we're trying to limit the amount of time it takes to do these problems, we don't really need to worry about the sales and recording those sales, recording those other details. What we really want to focus on is this liability piece of it. So first thing, whenever we make a sale, we want to make sure that the expense is recorded for that warranty in the same period as that sale. So I'm going to go ahead and record that journal entry that records that warranty expense and then also sets up that liability. And here it doesn't really matter what those names are necessarily called, as long as you have an understanding of what accounts it should be going to. So I got 4.5 million because there's 30,000 units sold and they each expect $150 of warranty cost. So I make sure I got that piece of it done. There's another piece that they give you a clue saying that they've paid some of these claims of $6 million. Because this was on prior year sales, I know that there's no more expense related to because I've already recorded that, but it is going to reduce the amount of liability that I have. And that would probably go against my inventory if I had to replace it. So now that I have all this information, but they want to know what is my ending balance. So let's look at that T account. This is for my liability, warranty liability. I'm just going to write liability for the sake of saving space. I need to bring in a few things. I need to bring in that original balance they gave me. I need to bring in also as a credit, because that's my normal balance, that liability I set up for this year's sales. And then I also need to bring in as a debit, you'll see the amount of liability that I now no longer have. So let's bring in these amounts. I started with 5.2 million. I'm adding an additional 4.5 million, but I no longer have to pay that 6 million. Therefore, if I'm looking for a balance in that account and I add up my credits, subtract my debits, I should get 3.7 million. So my answer would be D. But now let's look at it a different way. Let's say on the same question, I should delete this part. On the same question, what if they're now asking me what is the amount of expense the company report on its income statement for this current year? For this current year, I can go back, review what journal entries I did, and know I've already got this done. My expense relating to this year would be that $4.5 million. So what I want you to get out of this is the difference between the liability and the expense related. Remember, those expenses are incurred during the same year as that sale. So hopefully this helps. And if you have any questions on any other homework problems, just let me know.